Hey guys, my name is Desmond Leong and welcome back to another exclusive podcast from IronFX. This time, we're going to be talking about one of the most popular indicators that people use to trade, which is the Relative Strength Index, otherwise more commonly known as the RSI Indicator. We'll be talking about some of the most popular questions we get around this indicator, which are mainly, what's the best period to use? Do we use the default 14? Can we play around with it to 20? Can we adjust it to 30? Right? Then we'll also be looking at the different levels that the RSI indicator comes with. There is a default 70-30. 70 to be anything above 70 is usually interpreted as overbought, and anything below 30 is interpreted as oversold. Right? Can we play around with those settings? Can we move it to 80-20, even 90-10? Right? And then, of course, all this education will be for nothing if we do not explore how we can use it effectively. Right? So in our last question, we'll be exploring how we can use the RSI to trade more effectively, and hopefully, improve the profitability of your trading strategy. So let's begin with the first question, right? What is the best period to use for the RSI indicator? Right? The default period, the default setting that it comes with on most platforms is actually the 14. Which means that it looks at the past 14 bars, price bars, right, to come up with the RSI calculation, right? Now, the important thing that I want to focus on here, and actually, it kind of asks us to take a step back and think about it. Whoever said that 14 was the right number to use? Would euro dollar, obey this, the creator of the RSI indicator, and obey the 14 period that he has recommended, right? Would gold or oil or silver, or the S&P 500, would all of them, obey this 14 period that comes default with the RSI, right? No one ever says that they would obey that. And that is where I want to encourage you guys to actually try to take a step back and realize that the 14 period is just put there almost as if it's a placeholder, right? You should be playing around with the RSI. Take a more adaptive approach to it and play around with the periods that you see. It could be 14, it could be 21, it could be 28, it could be 35. Just increase it along the way and see which, under which setting does it give you the best reading. Right? Because what looks good on the euro dollar chart might not look so good on the dollar franc chart. What looks good on the euro dollar H1 time frame might not look good on the euro dollar H4 time frame. Each market has a different RSI heartbeat. You must think about it, it's like a different pulse, right? So do not fall into the trap of looking for the universal one best RSI setting, because it does not exist. Each market has its own little unique differences, and it's up to you to really try to figure out what is the best setting, what's the best period for each one. What I recommend is to work your way from low, basically like 14, and just keep adding 7, 14, 21, 28, 35. Just keep adding 7 until, you find the setting that kind of suits the market the best. Which leads us on to our next question. How exactly do you determine if an RSI indicator is working well, for a certain market, right? Usually we have the default 70-30, right? Meaning that anything above, you can imagine that you have the RSI indicator that has a reading from 0 to 100. Okay, you draw two lines, one at the 30 mark and one at the 70 mark. Draw horizontal lines all the way across, right? And the usual way to interpret the RSI is that if anything is above 70, it means that the market is overbought, which also means that, we should be expecting price to reverse because it's very, very high. The opposite is true for the, if the RSI reading goes below 30, right? That is where people consider the market as oversold, meaning that there's too much selling going on. Price should be making a nice little bounce soon. All right. So it's an oscillator style indicator. So it's a very easy way to read it. Now, back to our very first question. The approach that we use, right? No one ever said that 70-30 are the magical numbers, right? It could very well be 80-20. It could very well be 90-10. It could be 75-25, can be all the funky numbers, right? But no one ever said 70-30 is the right numbers to use. But what you want to do is you want to try to play around with the levels until you find a certain level where price tends to reverse the most from and bounce the most from. So if you notice, right, just imagine with me, right, because it's a podcast after all. I can't whip up a chart and show it to you guys, right? So imagine with me, looking at price. You're looking at the euro dollar chart, right? And each time, you see nice big reversals happening, draw a vertical line all the way to the RSI indicator and try to find at what level on the RSI did that big reversal happen. So if you look at the past 3 big reversals and you notice that each time that happens, it actually happens closer when the RSI reading is at the 80 level versus the 70 level, then that is what I call a hidden level of resistance, right? That means the true RSI reading is actually 80, at like the 80% mark instead of the 70% mark, right? So that's an important thing that you need to do, right? And it's the same thing when you're looking at price, right? When anytime price bounces, what you want to do is to draw a vertical line all the way, from where the bounce occurs all the way down to RSI and see at what price, at what percentage level did RSI bounce. Right, it might be a 30% level, it might be the 20%, it might even be the 10%, right? But the important thing is to identify what is the hidden level. Usually what I call it is called the true RSI, the true level that RSI tends to bounce from. If you cannot find one that really bounces up really nicely, try to play around with the RSI period settings, instead of 14, play around 21, 34, increase the numbers up and down, see if there's a hidden level, right? And from the hidden level, you can then open your, have a paradigm shift in the way you interpret the RSI. Don't just use the default 14 period settings. Don't just use the default 70-30 settings. Play around and see what is the market, what's the heartbeat of the market with a adaptable approach to using the RSI indicator. Okay? Now last, but definitely not least, right? How do we use the RSI indicator effectively during trading? So what the RSI indicator, as an oscillator, what works very well for it is that, it's very good at calling reversals, right? Think about it. If RSI is close to the top, there's a nice chance that it's going to reverse downwards, right? Which means you should be expecting, price to similarly reverse downwards. And along with, price, if the RSI is very low, maybe it's at like the 10% or 5%, right? There's very little space for it to kind of go anymore, right? And that is where, it's more likely that price is going to bounce, similar to RSI bouncing. So at its core form, RSI as oscillator is very good to play these kind of reversals. It's very high, you play a drop. When it's very low, you play a bounce. Right? But what I want to encourage you guys to kind of think about is that when it comes to using the RSI, have a paradigm shift in the way you interpret the RSI. For example, you don't use the 14 period RSI anymore. You play around, use 14, 21, 28, 34, right? Increase the periods up and down, right? And then increase the level, and you play around with the levels. Don't just take 70-30 at face value, right? Move it to 80-20, move it to 90-10. One good approach which I used to trade is that if I notice that the past 4 times, right, minimally 4 times, right, if the past 4 times the RSI has been reversing off a certain level in conjunction with price reversing off a certain level, right, that means the 5th time it happens, there's a high chance that the price might also reverse. Now, let me paint an example for you, right? We look at swing highs, right? Swing highs are basically, prices reversing, forming a little bit like imagine a mountaintop, a little bit of a peak, right? Every time we notice price forms a little bit of a peak, a little bit of a swing high and reverses, like what I mentioned earlier, take a vertical line, draw it all the way down and see where it tallies up on the RSI, right? Give yourself a tolerance of about 5%. So, anywhere, like if you notice that the first time it occurs, RSI reading is 70%. The second time it occurs, is 71%. The third time it occurs, is 75%. Right? As long as it's close enough to each other within a tolerance level of 5%, it is okay. What is not okay is maybe if the first reading is when the RSI is at 70, and the second reading is when the RSI is at 80. Right? That's too big a gap. Right? So you kind of want it to at least have a tolerance of 5%. right? So if we can find 4 of it consecutively, now the next key thing is consecutively, right? If you can find 4 of it consecutively that lines up around the within the 5% tolerance level of each other, that is likely that the 5th time the RSI reaches that level. So now imagine we have an area of about 70 to 75% highlighted on the RSI as a potential level where price might reverse from. Each time in the past 4 times RSI touches there, price reverses. So once RSI actually reaches that 70-75% again, there's a high chance that price would then reverse. Okay, so you can vice versa apply the same for the bounces, right? But a key thing that I want to advise is that, or rather recommend, is that do not just trade this in conjunction by itself, right? You need to see, okay, now that price, RSI is at the 70-75% level, what is happening to price? Is price also testing a major swing high resistance? Is price testing a nice Fibonacci retracement, a nice Fibonacci extension, right? Is there a nice price action happening? Is there a nice bearish divergence, for example, right, that might support our view that price would drop further, right? Try to line up different things together, because remember, right, it's not about trading these kind of strategies in isolation. It's about combining them together, and the more you combine, the higher the more you combine, the less really nice setups might appear. Right, if you trade each of them in isolation, maybe you can have 100 different trading setups. But if you combine all of them together and you set a very strict criteria for yourself, instead of 100 setups, you might only get maybe 10, but you get 10 good ones, right? 10 high probability ones, right? So that is what you do. Remember, the key thing is that the reason you're trading is not just for the sake of trading, right? The reason you're trading is to make money. So do everything in your power to increase the probability of you making money. Not to trade, trading is just a means to make that money. All right, guys? Now, that's it from me, guys, right? I hope you found this exclusive podcast from IronFX helpful, especially in understanding how to use the RSI indicator, to trade more accurately, trade more profitability, to improve your trading strategy, right? So I also like to remind you guys to subscribe so you don't miss out on our other podcasts where we do our best to guide and teach you on how to become a profitable trader with IronFX.